Welcome back. A live look at the markets now. Dow Jones up 430 points. Real gain right now. The market's just opened 20 minutes ago here. Joining us now to discuss what it all means, Doug Flynn. He's a certified financial planner. We also have John Browne. He is a former advisor to President Trump and Margaret Thatcher. Good to see both of you guys this morning. Doug, I'll start with you, our certified financial planner, sir. What do we make of the markets here? I know that right at the end yesterday, we dumped off. Now we're seeing some big gains just 20 minutes in.
Yes, I think a lot of this has to do with the fact that you're getting continuous good news about treatment information. You combine that with the market looking forward and getting and seeing the other side of this, and massive stimulus that we have coming through, and it's overshadowing some of the negative GDP numbers that came out a little bit worse than expected, but we're thinking positively, and I think that's what the market's reacting to. But, it's getting lofty in terms of valuation here, so we have to be very careful.
John, I want to bring you into the talk about the GDP here. All this comes as we get a look at the first quarter gross domestic product report. We'll show you this. The U.S. economy, it is down 4.8% according to the U.S. Commerce Department. That is the worst performance since late 2008 during the financial crisis. A sharp contraction comes amid COVID-19 state shutdowns, millions of layoffs. What's your take here on the economic data and the news, again, of the GDP number?
Well, first of all, may I say I agree entirely with what Doug said about the market, although I think there are much more dangers ahead on that front. Regarding the economy, I think you're just beginning to see the first waves of not just recession, but depression, because the Congressional Budget Office estimate that the U.S. economy is going to shrink by 40%. And that is roughly $9 trillion. If you add in the money the Fed has created, which is approximately $8 trillion, in this stimulus, which I agree with, it was an emergency, and you've got a sort of $16 trillion problem, which is just less than, in trillions, of course, than the whole GDP of the country of 21 trillion. And so the virus is actually turning into an economic crisis, and that will lead to a financial crisis. And therefore, I totally support, although I'm a hawk on government spending and borrowing, I support this because you have to take extreme measures when you're facing an extreme emergency.
Right.
We are.
Doug, I want to bring you in on this. I do not mind telling you when I talk about GDP, it is completely out of my lane. But that's why I have you guys here. Is this alarming when we see this GDP number?
Well, the scary part to me is that in reality, you only have about 3 weeks worth of the shutdown in this GDP number. This is the first quarter GDP, which ended at the end of March. All of this month of April isn't in this GDP number. And to John's point, that's what we're going to see 3 months from today in the July numbers when the second quarter comes out. And we've been in a complete shutdown for the entire month of April and maybe May and into June. That's where that 30 to 40% negative GDP number is going to come from. But remember this, it's an annualized number. So 4.8% is annualized, meaning it really shrank 1.2% in reality for the quarter. It's still a negative. We expect it. The market has been discounting it in and sort of anticipating a very short recession and snapback into the third and fourth quarter. And that's why I think the market's high while we're still expecting a lot of negative news here with gross domestic product.
John, Fed Chairman Jerome Powell, he's expected to give more details on what's happening here since coronavirus started. What do you expect him to say? What do we expect to hear from the Fed?
Well, I think we'll see more definitive targeting of even more creation of money. And as I said, I'm a hawk on this, but I support it because this is an emergency. And I think one of the biggest dangers is, in terms of the stock market, is that, just as Doug has said, the reason it's going up is because we talk about a vaccine and things like that, and Fed injecting more and more money, and the Fed and the market will go up on that news if the Fed's going to create more money. But the danger, and you see, this is worse. The speed and depth of the decline in the economy is worse than it was in 1929. And what happened in 29, the market went down and then shot about 50%, then shot up again, and then went really down, like 86%. And the danger is that people will be tempted in now with markets rising for the very reasons Doug has mentioned, and then get suckered in for an even bigger fall. And that, I think, is what's worrying the Fed. So I'm expecting quite significant action by the Fed.
Yeah, great point to bring up there. Doug Flynn, certified financial planner. John Browne there, former advisor to President Trump, Margaret Thatcher. Guys, thank you both. Stay safe.